I'm just going to do a quick screen share as well, so that you can understand exactly where to access these opportunities if you qualify to invest on BnkToTheFuture.com. So the first thing to notice is that you head over to this section here, and you can see a section called Start Trading. Start Investing is where we have all our primary market. So primary market means that we're working with a company in order to complete a funding round or part of a funding round for that company. At the time of this recording, we've just closed our two recent deals, which is the Robinhood SPV and the Layer 1 deal. Now we're working with our next 5 deals to go on the primary market. They're going through the due diligence process before we put them live there. In the meantime, we have our secondary market, and we've got a video here and some FAQ that I think we can tighten out a bit more and add more questions with some of the things that we cover here. And if you head over, you'll see some of the companies. So we've got our first 7 or 8 companies, and we'll go a bit deeper into why it's, why these are named here and what they actually are, what you're actually getting. But you can also, once you hit a deal here, so you can see we got the Bank to the Future Bitfinex SB company. So this is a company backed by shares in Bitfinex. And I can hit here, I can go over to the trade button, and you'll see here all the people that are looking to buy, all the people that are looking to sell, and we have an over-the-counter market to where you can take any of these orders if you want to buy or sell. You can see a bit of price history, order history, and I can quickly, let's say I've got some Bitfinex SPV shares. Well, I can click here on the sell section. It's a really simple user experience. I can simply enter how many shares I would like to sell. So let's say I'd like to sell 100 shares, and I'd like to sell those at $20. Let's say I put in a price of $2. You'll notice that it will tell me that this is below the price floor, and we'll go a bit deeper into that feature. But it will let me know if I'm trying to place an order below the price floor. And here I can have $20, and it will tell me if someone's already got an order, and I can just take some of those orders, or I can enter a higher price that I'd like to sell, and it will let me know whether those orders exist. Let's see, what price should I do here? Say $10. And this is, oh, sorry, that's the reason why I'm a bit confused, because it's a buy order. So I can place the buy order any price above the price floor, and it will tell me that there's someone else looking to sell at that price. So let's say I wanted to do $4, it's below the price floor. So I put in $4.50, and then it would tell me who's to match up, and I can take one of those orders. Now, let's say I actually already had shares, so I can go back to the market, and in this particular demo account, we've got some shares in the Kraken SPV, and now you'll notice that there's actually, once this comes up, it's probably a little slow because we're streaming at the same time. I've not only got the buy button, but I've also got the sell button here. So I've got some shares. It will tell me some details about my position, and I can enter an order at which I'd want to sell. So let's say I've got 100 shares, and I would like to sell those at $20. It would tell me that that price is below the price floor, so I can't sell at that price. But maybe I do it at $30. Great, and it would tell me how much consideration I would get if I successfully sold at that price. And then it's like a bulletin board, that order will go up there. There's some very important legal disclaimers. The reason we put this here at every order, we don't want these buried in the terms and conditions. We want you to understand some of the challenges when you're purchasing shares or selling shares, and it will tell you about the lack of information rights, dilution, and lack of dividends, and some of the other things that are important to understand when making a purchase or sell order in an SPV. And then it will just give you a simple order summary. You also notice that if you want to get a discount and get 50% discount on your trading fees, then if you are a Bank to the Future member and you've got Bank to the Future tokens on your account, then it will tell you can select here whether you'd like to pay with your Bank to the Future tokens or not. And if you pay with those tokens, then you actually get a 50% discount on the trading fee. So that's a very quick overview that I wanted everyone to have so that they could understand that. And now I think this is a good time for us to dig into the questions, the most common questions from our investor relations team. So Famida, what have you got for us?
So I guess let's start off with the basics. What is the BF secondary market? And I guess you've shown slightly how it works, but yeah, a little bit more detail maybe.
Yeah, so the goal of the secondary market was for the mission that we're trying to achieve here is that if somebody wants to come along and they're bullish on the future of the Bitcoin and crypto sector, then some people will be investing into Bitcoin, others will be investing into alternative cryptocurrencies and products and investment products. But we wanted to create one place where somebody could get complete exposure if they qualify to invest to the equity of all the companies in the industry. Now that's a goal. We don't have all the companies in the industry yet, but our goal is to get there whereby if there is a company missing, thanks to the relationships that Bank to the Future has built over the last 10 years, we can get some of those companies into one of our special structures that we'll go a bit deeper into. And once it's in our special structure, we can match together in an over-the-counter market between qualifying investors and automate a lot of the complications in terms of transferring shares, signing share agreements, and we can automate that whole process to make a really, really seamless experience where someone can come along and currently they can pick the companies that they would like to buy shares, and they can set a price target at which they'd like to sell it, and it can just sit there on the market until someone else wants to come along and take that order. Now, at the moment, it's just simply you pick deals. The future vision is obviously that someone could come along and just simply say, I would like to have $10,000 diversified across the whole industry, and with a few simple clicks of a button, you can have complete exposure to all of the major companies and some of the more earlier stage companies in our industry. So that's why we built the secondary market, because quite frankly, there is nowhere out there where somebody can actually get exposure to the growth of the companies that are actually building this industry.
Can I ask a side question to that then?
Sure.
So what does it mean for, we do talk about invest to hold, right? So what does it mean in that sense?
So when you're investing in private equity, you're investing in a high risk, high return, long-term investment. That means that people invest in private equity because the returns are expected to be very high if the company succeeds and if the company exits. High risk because the likelihood of that happening are actually the odds are against the company doing that, because most businesses fail. And so it's a high risk, high return asset class. And therefore, the long-term time frame in which a company, so let's say you were an investor in Facebook or a company maybe in our industry like Coinbase. So Coinbase, when they first started, is very hard to secure funding. And so they might come on something like our primary market, and we would pull together lots of investors. But then it took Coinbase from 2011 to approximately 2019, so a period of 8 years, to be worth $8 billion. But if you invested right at the beginning, it was, those early seed rounds were several $1 million, the value of the whole company. So I'll give you an example closer to home. Imagine you did that. Well, firstly, if you invested in Facebook, it took them about 9 years to go public. So these are where the ultra high returns can be if the company gets to that stage. Another example is we did an early funding round for an exchange called Kraken. That was done at approximately $20 million valuation. And the second funding round was done at a $4 billion valuation. And they have a plan for how they want to get to another 10x from here if the industry succeeds and the company succeeds. So it's long-term investing for people that want to deploy capital into the growth of an industry, as opposed to, trying to trade and really quickly make returns in a very fast way.
Yeah, and just to add to that, we were talking about this last week. It's more another aspect of it is if you've just entered into this industry, you need to have a quick snapshot of the industry. You want to catch up on the 10 years that have passed in crypto. And by coming into the secondary market, you've of course missed the primary offerings of the previous ones that happened 7 years ago. But you now have an opportunity of catching up. And to that extent, no one gets left out and people can still join in this crypto journey. They may come in a little bit later, but they can still join and have exposure to the whole industry as well.
So does that mean that the shares bought on the secondary market is diluted in some sense in terms of quality or what they're going to get in returns?
So this probably leads to one of the questions that's coming up, which is that traditionally when we were in beta, we only took the most reputable companies in the industry. And the rules of investing are, the higher the risk you take, the higher the return, the lower the risk, the lower the return. That's just the rules of the market, every market in general. And so that applies to private equity as well. So if you want to invest in a company like Coinbase, then right at the beginning, they were worth a lot less because there was factoring in the risk of whether they would succeed. But now a company like Bitfinex or Kraken are household names. The likelihood of them, or getting towards an exit and becoming bigger and growing from here is they've taken out a lot of those risks. So therefore you pay a higher price for it. In the beta, we only wanted the companies that had the most established brands. But now we're moving out of beta. Our goal is to actually introduce a wider range of earlier stage deals so that even if you miss the primary offering, there might be somebody that wants to sell their shares because they need liquidity, and they might be willing to sell those at the very same price as what they invested because their circumstances changed. And therefore you can actually still get in at the identical valuation to if you were investing in the primary. But if the company has then come along and done another funding round and that company is worth a lot more, then we're introducing a feature that we'll cover later called a price floor, which would then mean that you couldn't get in at that lower price. So it's kind of the differential between when the companies are doing their different funding rounds, you have this opportunity to get in at a lower price, as opposed to once the company's got to the next phase of their growth.